And now to Market Watch. How have the holidays affected the markets? Well, stock market activities dipped during the holiday shortened trading week as investors exchanged 3.214 billion shares worth 76.35 billion naira in 64,156 deals. This marks a 56.4% decline in transaction value compared to the previous week's 3.794 billion shares valued at 119.39 billion naira across 89,636 deals. The Nigerian Exchange operated for only 4 trading days following the federal government's declaration of Friday, June 6th, and today, Monday, June 9th, as public holidays in celebration of the 2025 Eid-el-Kabir. The shortened week and festive slowdown contributed to a drop in market turnover. We have Muktar Mohammed, CEO, Finance with Muktar, joining me now for the conversation. Good. I can see you're dressed for the holiday indeed, Mr. Muktar. Let us into how this holiday, we know we still have several more to come, and there are also complaints about, Nigeria having too many public holidays. Give us a picture of how this is impacting market activities on the NGX.
Yeah, Juliana, depending on where you are on the NGX, sometimes if you're in the space that you are losing money, you want to slow down. The holiday gives you room to slow down. If you're a trader or a broker, also you want to slow down so that you can reassess your strategy and also move forward in the market. So it depends on where you are. For me, I think the holiday is just a time also by reflection and seeing what you have, how the market could help you do better.
Mm-hmm. All right. So depending on where you're positioned, hopefully you're on the right side of the divide. But we know that before the holiday, there was a 4-day monster rally. The market gained 1.8 trillion in 4 days last week. Let us into some of the major drivers of this rally.
Mainly driven by 3 sectors: the financial sector, the ICT sector, that we'll call the information and communication sector, and the consumer goods sector. If you look at what really drove the market during the week, you see the financial sector, where the largest driver, you see stocks like GTCO, stocks like Zenith Bank, stocks like Access Bank also moving the market. But the ICT sector, you saw a stock like MTN Nigeria making its highest 52-week highest at about 319 naira, which was a huge move, and that also had a positive impact on the market. The consumer goods sector was largely driven by Aligo Dangote Cement also. That also was one of the big drivers of the market during this past week. But market activities were generally positive, and also O&O also was one of the key drivers in the market, gaining almost a huge chunk of the percentage to move the market forward in the oil and gas sector. So when you look at all these numbers, definitely they were very positive during the 4 days of trading before we came on the public holiday.
Right. So you've highlighted some of these sectors driving the rally, but do we have fundamentals? Are there, what's the market anticipating that is perhaps driving rallies in these particular sectors? With MTN, as you have pointed out, and some of the financial, the banks?
When you look at it, the fundamentals of the Nigerian market is still very strong. If you look at the results that were put in by these companies, especially the financial sector in the first quarter, despite the headwind in the economy, you saw that these numbers were very positive. They have very positive earning per shares also. And also you look at the drive towards recapitalization. You realize that a bank like Zenith Bank and Access Bank have completed their recapitalization drive. GTCO is about to complete that, but it's going to do that also by attracting foreign investors or preferred investors. Fidelity Bank also have completed its recapitalization drive, oversubscribed also. First Bank also at the point of conclusion. So those are key drivers of those numbers that you see in the financial sector, especially when you look at these 4 banks, or what we call the Fuga banks. So that has really drive activities in the financial sector. And again, you shouldn't forget that we're going to have the second half year, whereby some of these banks will be paying interim dividends, and Nigerian investors like cash. Cash is normally key when you talk to interim dividend. For MTN, Nobody's surprised. Remember, the last year or throughout last year, they recorded huge losses. First quarter of this year, they recorded huge profits. But those issues were as a result of the what do you call it, the floating of the naira, of the revaluation of the naira, that had an impact on them, especially because of their dollar domination transaction. So this the result that came out was very, very, very positive, and the markets are starting to respond to it. Coupled with that, you know that also the NCC approved the change in tariff both for data and also for calls, so that also have improved their bottom line. Exchange rate also have stabilized. I mean, in the corridor of stability of 1,600, that also have helped improve their fundamentals. And also we expect also with this NCC rules again, payment also by the banks in settling some of the debts that they hold this company through the use of a USSD code will also have impact on those numbers going forward. So investors are beginning to take position in MTN. You could see that also in the volume that was traded in MTN during the week. You go to the Dangote Cement, you saw that those numbers were positive also. These are due to renewed activities, and during the week that Aligo Dangote made us to realize that we are one of the largest exporter of cement to outside the shore of this country. I think the investors are beginning to digest these numbers, and you're beginning to see a lot of activities on these three sites.
Okay, we haven't even gotten to, Q2 economic reports just yet, so you can imagine what's in store for the market. But what would you say? We know that this year started off rather slow, right? At some point, we're in negative year-to-date returns. Right now, it's 11.3%, right? We're up. So, I mean, what would you say this points to in regards of the larger macroeconomics and, Nigerian economy? What does this reflect of the Nigerian economy? Or are you in the school of thought that they're divided? Whatever is happening on the NGX does not reflect what's happening in our real economy?
Well, it depends on the policy. When you look at the policy of the current administration, it tends to favor the NGS so much. If there's any sector that have benefited from the sustainable reforms, it seems to be the NGS. So it seems to like if it takes a life of its own outside the market, because those policies are beginning to, they hit the ground rolling in the NGS. We saw those number comes in and they're very positive. We saw those reform hits the NGA and instantly the results started coming in compared to other sectors when it seems that other economic sector when it seems that those results are slow in coming in. But when you look at the NGS and the quoted companies, where the financial companies, those policies seems to give them a lot of positivity. Oil and gas sector, those policies, the removal of subsidies seems to give them a lot of positivity. You saw that in the number. But again, there was a drawback again if you look at the consumer goods sector, the manufacturing sector, those policies seems to hit them really. So where we are now, if you look at inflation figure, but in the larger economy, we have not seen those positivity yet because of foreign exchange issues, and also we have not seen that because of level of earning, the earnings of the average Nigerian, the cost of goods and services, because some of these companies that are listed in the institute pass this cost to the consumer in turn improve their bottom line. So that's why what we are seeing. So yes, in the short term, normally the market seems to take a life of its own, but to sustain the kind of stability that you want in the market will at a point need the economy to stabilize and to continue to move forward.
And I think we'll dive more into that after the break, especially the school of thought that believes we need higher interest rates for the markets to benefit. We'll get into that conversation in just a bit after this break. Stay with us.
Okay.
You're still watching Market Edge, and of course, we are taking a deeper look at what has happened on the NGX, especially with the holidays, and how perhaps investors can take position ahead market reopening tomorrow. We have with us Muktar Mohammed, who has been providing us some insight into what's happening on the markets. Let's delve into, of course, we have been seeing that jumbo rally last week, the 4 days of trading. We've seen it. This week is another 4 days of trading as well. Because we do have, rather 3 days, right? We have a public holiday June 12th, so 3 days of trading. How do investors navigate these? I mean, you've hinted about who benefits, right? How do investors navigate these trading days in between, right? Last week, 4 days, this week, 3 days. What is the strategy?
I think, Juliana, if you look at those numbers that came out from the index, you realize that trade value was not as it was the previous week in terms of trade transactions. So what we are seeing, investors are looking at, most investors are looking at after the holidays, then they will begin to key into the market. If you look at that, if you look at those trading numbers that came out, so definitely investors are still doing what of course you don't look and looking at where it's driving, where the market is going to, and then most investors also have their stocks that have entered the market at a good price and not selling. They are seeing a lot of potential fundamentals, potential for a long bullish run in the market. So you might not see a lot of activities this week again. A lot of investors will sit on the fence to watch how those numbers planned out during the week, especially in terms of movement in volume and also in price. So we might not see a lot of activity this week, but again, we might see those bullish run because we still have a lot of investors not ready to sell and some very few investors trying to key in into those numbers.
Interesting.
Before the public holiday is over.
So pretty much a wait and see approach, and we may continue to see a decline in volume and trade volume and trade value, as we did see last week. But there are those who say that for the markets to reflect true returns, right, we need to, or for investors to be incentivized further, we need to see interest rates go to as high as 30%. What are your thoughts on that? Having interest rates that high so that investors can get proper returns on their investments?
Well, it depends. If you are trading with the consumer goods sector, high interest rate doesn't favor that sector, especially if this company is still hard. It will still have a lot to do with investors' strategy, but a high interest rate ordinarily doesn't favor the market. It favors the fixed income space. And that's sometimes, again, if you look at what happened last week, that could also be what was attributed to the low volume of trade and also value that you saw. Some investors might be taking profit and seeing those numbers high and trying to go into the fixed income market to protect their returns and also to look for good entry points. So it depends on where you are as far as I'm concerned. If you are actually in the consumer good manufacturing sector, high interest rate doesn't favor you. If you are in the financial sector, high interest rate favors you. But again, by and large, a low interest rate normally favors the market compared to hiking interest rates.
Interesting. I mean, we'll see how investors continue to take positions considering the larger macroeconomics. But again, we have seen a rally on the markets, record highs, 72 trillion when it comes to market cap, all share index 114,000 plus. You have said that this week we may see reduced momentum because of the multiple holidays, 2 holidays, today and Thursday. But I mean, looking further ahead, where do you see the NGX going perhaps by the end of Q2 and its performance overall, especially compared to its neighbors? We have the chairman of NGX mentioned reaching the 100 trillion naira mark this year. What are your projections?
Well, I think the 100 trillion naira mark, if you look at where we are now, about 72 trillion, and going to get to the 100 trillion naira mark in the next 6 months, from where we started, from where we are, could also be achievable. But again, you also shouldn't forget that he was talking that in respect of listing of Dangote Petrochemical, and so that could hit that 100 trillion mark. It's not just looking at only the market activity that is happening at the moment. So definitely, if you get that company listed, that company alone could help also. You've seen a lot of movement into the trillion naira space from a lot of companies, and even those that are not there are almost there. So definitely that is helping the market. But when you look at, like you say, your question about Q2, a lot of investors will definitely be taking position in some very, very good stocks, especially the financial stock. Have we seen an end to it? I don't think so yet. Because again, why I say I don't think so yet, like I said in the beginning, we still have UBA. They've not done their recapitalization. You saw a lot of activities there, especially by Chief Tony Olumelu acquiring most stocks of his own company. That is telling investors that, look, I'm more confident in this company. I know that they are also at the last stage of their recapitalization drive. GTCO also, you could see that the company's group managing director have talked about them going to foreign the assets from preferred investors through foreign investors coming in. So there's still a lot of value in those stocks. So we talked about the MTN. I've just told you about the recent policy from NCC. That also shows that there's still a lot of value in that stocks. As we've seen from companies that have been the tick, especially this week, from companies like O&O, from companies like from the banking sector also, in terms of their earning per shares, and also from the conglomerate. You just have to be positive going forward. And then if we have that listing, definitely we might even pass that 100 trillion naira mark. But I think it's very achievable. There's still a lot of value in the market going forward. There's some stocks that still have huge potential of going forward, especially when you look at their Q1 results.
All right. Thank you very much. Obviously, momentum is still rising. We'll see whether we can keep up the positive sentiments on the market, even as trading resumes tomorrow. But it's been a pleasure getting your insights, Muktar. Mohammed Muktar joining us. Of course, he's the CEO of Finance with Muktar. It's been a pleasure having you in.